Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Welcome to the Friday chart clinic. It is about maybe a bit early. We start at 11:26. I'd like to welcome you to our weekly Friday chart clinic and for the week of 13th of September 2003. This month, September 2003, is our Traders Truth Review turn 5-year anniversary. It has been a very interesting journey since 2008 when we started off in Traders Truth Review. So we were still looking our identity, and along the way, we to mark our also educational purposes with this website is to educate people about the market and about the financial market and what to look for. And we have been strong in providing that quality education information. Those of you who is coming and attending this Friday chart clinic would know this is really an education in nature to help you out in knowing the nuances of the market and how to make a path to really optimizing your money, to doing what you love doing. The stock market means making money, and that's the whole purpose of the Traders Truth website. So we are strong in providing quality education and information. And as such, to for this promotion and for new sign up only, it's only for the cash. There's a couple of people went in and bank in by credit card. So they noticed that there's no 10% discount. Now this is only for cash. If you wish to sign up for the Traders Truth Review membership, premium membership, let us know. And for this money, for new sign up, you'll get a 10% discount offer. And we only do this once a year. Okay. On a second thing is the along with the theme about quality education, you all know that Bill and myself, we do this Master the Market Foundation course, and we have an emphasis on the meta stock training. Now all the shares that you're giving me to look at, you can analyze them yourself. And one of the ways to do it is actually, if you have no knowledge about the market and like to know a bit more, come to invest your time, to Master the Market Foundation course that we are doing at our office on the September 30th and 1st of October. So the registration now is open. You just have to make it all available for all. And in this training, you will get a copy of the Meta Stock Training, an older version, which works very well. And we will be giving you a filter to look for stocks that is, that is about to give you some sort of opportunity in the market. So that's all I want to say. With the Master the Market Foundation, it is an investment in your education in knowing the market. A lot of people have benefited from him, and a lot of people has passed through this door over the years. And we've been doing this course almost for the last what? Bill, how many years was that, Bill? Course?
10 years.
More than 10 years, and a lot of people have really benefited. Some went on to become investment bankers, wealth planners, unit trusts, and it's a really career for any of you are considering into it. Okay, now Henry is want me to look at 4065. Okay, Henry. Right. So this course itself would be really help you out, especially in really looking at things that we look at. As you can see, last just very quick one. Those of you who came last Saturday, we did talk about one stock. I think those of you who came last Saturday for Investor Club, you know what I mentioned, and I think it was out on this morning blog, so you can check it and see how much it's been up since then. So that's one of the things that we do. All right, with that, I would pass it to Bill to give you an update on our US side. Yup, want me to look at Old Town again? Okay. Here you go, Bill. Go ahead.
Okay, good morning, everybody. I'd like to report a few things. The first thing I'd like to report is that the I want to something about sentiment, which is quite interesting. As you know, and this is from the Financial Daily, the Edge newspaper, which is a very good financial wrap up every business day. The KLSE has had a 6.8% fall from its 24th record high, and now has had a rebound of 5.1%. So at this point in time, we are only marginally down. And one thing that we have seen is that when the market was at the high, we saw a lot of bullishness, a lot of euphoria, and traders were coming in and buying. And the futures had taken a big jump, um, and everything was wonderful. And then we had a big drop below 1700. I think it was about 1680. And then sentiment turned extremely bad. You saw a lot of bad news. A lot of analysts were saying the world's coming to an end. A lot of doom and gloom, a lot of pessimism. And then when the market was at this low, there's something that Martin and I track, and it's on the blog. It is the Bursa Malaysia trade statistics of institutionals, retail traders, and foreign funds. They're buying. And we've noticed in the last few days we have had a major turnaround in terms of foreign funds are coming in and buying, and they've been buying quality blue chips at a much more reasonable price, locking in good dividend shares and so on. So that's interesting. And something also that came out of the Financial Daily that I read every day, and that was that investment guru Mark Faber has come to Malaysia, and he spoke with the MIDF Group Managing Director, Dato Muhammad Najib, at a seminar that was organized by the Amana Investment Bank in KL. And Faber made some very interesting comments. One of them was that Malaysia's financial institutions are some of the most solid in the world because they have very, very low or no exposure to derivatives and all of the products that have weighed down the balance sheets of banks worldwide. So he mentioned that. And he also said this. He also was saying he favors stable Malaysian equities. And some of the ones, the shares that he said that he holds himself are obviously Public Bank, Maybank he likes very much. He also likes Guinness Beer, BAT, some of the quality consumer shares that he continues to hold in his account. And he also said, don't get scared by these periodic shakeouts because the fundamentals are still very, very strong in Malaysia. He says even if his Malaysian tobacco and brewery stocks should go down by 20%, he will buy more. This is what he said in this interview. And you got to remember about Mark Faber. He's a very frank individual. He's like Jim Rogers. He says it like it is. He just doesn't say things to please his host. He says it like it is. And he also recommended to continue to hold physical gold. Although there's been a big drop in the gold market in the last few days, he said continue to hold gold, continue to accumulate physical gold. So overall, I think this is a very positive assessment on the Malaysian economy by somebody who actually invests his own money, not someone who just talks about it. He puts his money where his mouth is, and these are the kind of people you need to pay attention to. So having said that, the portfolios that Martin and I have been managing, I would say that they haven't really lost anything. And in fact, they've gained because there's been several very nice, handsome dividends that have been declared in the last month. Some of these dividends include Gas Malaysia. They declared a big one. Then there's some of the others. F&N did a dividend. Um, and also Telecom has paid a very nice dividend of recency. So despite all of the doom and gloom and pessimism, these companies continue to pay good dividends, and I'll just share something interesting. I manage my wife's money. She put her EPF money with me, and I've had a very reasonable return. But she never asked me what is the price of Nestle, which I bought her. She never asked me what is the price of Gas Malaysia. She never asked me the price. She only says, Bill, when is my next dividend, and how much is my dividend? That's what she's concerned about. She doesn't care about the daily fluctuations of the shares that I bought for her. She worries about how much money, because those dividends she can take and buy a nice handbag, she can buy nice clothes, she can pay her expenses, and she's very happy. And in my opinion, money is the same as happy. The more money you have, the more happy that you have. So Okay, REITs, in my opinion, are like bonds. They're very solid. They pay good dividends. But unfortunately, when interest rates are rising, I would not really recommend to buy REITs. REITs have had a very major correction, and because they're very much related to interest rates. And if the economy should slow a bit, that means there'll be more vacancies in the retail space, and property prices may come under a bit of pressure. So I like REITs in an environment where interest rates are falling, and we're not in that environment. We've had a major rise in the MGS. So I would say focus more on companies, consumer companies that can raise their prices with inflation, and now, obviously, they've raised the petrol price by 20 cents a liter. So this is going to be inflationary. So I would say at this moment in time, do avoid the REIT space. I hope that answers your question.
Thanks a lot, Bill. And that was from Bill regarding about the market in here. Now, one of the things that we want to do more in a series as part of it's just a short uh, introduction to volume spread analysis and also to promote our course, which is really focusing on volume spread analysis, where the next one we're doing is September, is we will be coming up with a series of quote from volume spread analysis, and we will be attempting to explain it to all our listeners from the Friday Chart Clinic what it really meant. Okay, so this will be ongoing, I think, for the next 2 to 3 weeks. We'll just have one quote and we try to explain it. And this is how we would able to let people know the power of volume spread analysis and why you should learn about spread analysis. Now, I'm not saying that you have to come to our course or buy our books for that matter when you learn volume. So there are a lot of material out there, but use it right to your benefit and see if it does help you make you money. Tell your friends. I think that's what's really important. We find that volume spread analysis is very so-called valid in today's scenario when we talk about institutional money, especially lately. Bill was also talking about foreign funds flows, institutional flows, and those are the smart money you want to be tracking. Do what I've said all this make sense? Yeah. Do what I just say all this make sense? All right. Good. Good. Yeah. So, all right. So this one. Now, the first statement I have here is from volume spread analysis, which is something that we teach in our course, is learn to read volume. Okay. Institutional markup prices to draw in buyers so they can unload their position to these buyers. How many of you think this is a true statement? Okay, let me repeat that again. Institutional markup prices or smart money mark up the prices to draw in buyers